Welcome back to the channel, and as always, if you are copy trading, you're an absolute moron, and you deserve to lose all your money. And with that out of the way, we're gonna look today at a stock that I have just entered, and you can see trading in real time. And the name of that organization is Johnson Controls International. So, a bit of information about these guys, what they do. You can see that the stock has been falling quite a bit today. And if we look at the last few days, it has been doing so for, well, since the end of May. And why that is, and why am I looking at this stock as a short? Well, first of all, if we look at the last earnings report, they miss their numbers by $1.15, which is pretty big. And if you look at how the stock reacted, this is when it happened, it dropped quite a bit. But then it had this rise. And there are some reasons for that. First of all, this is a sector that is still has some tailwinds, is refrigeration for data centers, which is a sector that is expanding. Um, and As well, if we look at here, this little gap when the stock popped, that was when it was announced that Elliott, the investment management company, was taking a stake in this stock. And we, in the space of just a month, right, have gone from a valuation of 60 to 74 and now back down to 70. So why is that? Well, during the month of May, there was a bit of uh, uh, tied up into the markets, but now we're reaching levels here in the valuation, which to me I think is a bit of a stretch. We enter oversold territory. MACD is telling us that this is a stock that's going to drop shortly. But if we look at the valuation, let's look at all, and I'm going to remove the RSI. So you see where we are sitting at the moment. It's pretty high. There has been little times aside from 2008 where the company was probably losing a lot of money, hence the valuation went up so quick. And also during the pandemic, where the valuation was just overblown. So to me, there was really no reason in that earnings report to justify this move, which if we look a little bit further now, is overdone, right? So the number of revisions that we see in the stock, as in their EPS, has at the same time eroded significantly over the last 90 days. You see 15 downgrades versus one. That's for the upcoming
What a
quarter,
film.
right? So that's pretty steep. And again, the last quarter, like I said, was not positive. It was pretty negative. They missed by 15 million in their revenue, which when you look at the financials, so sales down, EBITDA slightly up, EBIT up. I think that's one of the reasons why there was a bit of a positive reaction at the moment. EPS as well, but EPS also gap very down. When you look at the financials, if you delve a little bit deeper uh, beyond the headline, what do you get? Well, look at how the revenue growth has been slowing significantly. quarter over quarter. You get a similar picture with gross profit margin, even more bleak picture with the EBITDA margin. Net income margin was negative in the previous quarter. And yeah, apparently there was, I read some analysis from Seeking Alpha pointing at some parts of the earnings report was missing. I don't have that at hand right now, but I thought it was pretty interesting. So where does this leave it? Well, cash flow from operations as well. That was negative. That's definitely not a good picture. It was not a one-off because we had the quarter prior to that as well. So I'm sitting back here and looking at all these things together, right? The the revenue revisions are also down 13 to 3 by the analyst community. And so I really don't think that the valuation here is justified, especially when you look at their competitors. So, for example, this company that we're looking at here, valuations at the lowest compared to the key competitors, and by a pretty big chunk. At the same time, this is a sector that has been on the rise. I mean, you can see the rise in valuation since the beginning of the year, even more pronounced with this one. And I think this upward trend that we see here is running a bit out of steam and likely to revisit these previous levels that we saw early in the year. Why could that happen? What's the catalyst? Well, this company has exposure to China, and they mentioned that they had quite a bit of weakness. They experienced a bit of weakness, and they still hold a pessimistic view for the rest of the year. I do think that we are entering a period where the market has realized that and has changed its mind on Chinese equities and Chinese stocks. So when you look at all the Chinese equities, you see strong momentum down. I think that could drive or keep continuing this momentum, this downwards momentum that we have seen. A few other things that I think are quite interesting. So the market cap is 48 billion, but the enterprise value is 58. So that's telling us that the market thinks at the moment or is paying less for what the actual things inside the company is. And one more reason that I find this interesting is that the PE, the trailing PE is 26, but the forward PE is 17. So there's quite a bit of differential there for this to move, especially when you look at the revisions being down so consistently. So I have it enter now. We'll see how it goes. I think that my chances are that we're gonna probably reach these levels here around 66, but my price target is in the low 60s. So I have just bought some puts on the 16th of August and sold some puts as well on the 19th of July at the $70 level. So with the prices that I'm getting, assuming we reach $65, I get a small, not huge, but I think there'll be time for this to develop and keep driving that momentum downwards, revisit these levels over here around 60. If we look at the 60 level, which I am in the expiry of these options, I could achieve up to 4x the return after expiry. And before expiry, 1.5 return for an investment of $780. So there you have it. Quick one. Hope you enjoyed the video and see you soon.